Today, we're going to do the Chapter 3 practice exam. And there's two parts. There's multiple choice parts. And so we'll do the problems first, 11 through 16. When we're done with that, we'll do the multiple choice. And the multiple choice, if you finish up these problems early, or if you have extra time already, you can start working on these, because what's going to happen is I'll send out a poll, and on the poll you'll put in 10 your 10 answers and submit it. And when everyone submits it, then we can go ahead and we'll see where we land. So it's majority rule. So whatever answers pick the most is the one we go with. If the class gets 50% of those right, I'll add 3 to the exam scores. You get at least 75% right, you get +4. You get 100%, you get +5. The 75%, there's only 10 questions, so there is no 75. So if you get 7 out of 10, you get +4 as a class. I can even put the poll up. Maybe not a bad idea. I'll put it up right now. But we'll start working on the. So if you get bored, you can, you can go ahead and do that. Oops. Oh, come on. You know, I hate about computers nowadays. They try to guess what you want. So if I wanted to do that, I would just do that. Don't try to guess what I want. Okay, so we'll do the questions first. Let's see if I can do this somewhere. Okay. No, you probably don't need to see me anymore. Okay, that way I can move my camera. I got a camera that's in the middle of the screen, because otherwise it looks like I'm looking at the shoes or something. Okay, so first one, beginning inventory of office supplies was 230. $510. Supply. Oops. Green. It should probably be were purchased, but I get the idea. And at year end, 200 of the supplies were left. No, let's do. Hey. Okay. So. How much of the supplies were used? When you figure that out, either say it or you can throw it into chat.
$540 was used.
I asked a question. I don't get. Yes. Yep. That's it. Okay. So beginning supplies. $230. Purchase supplies. So the total available. So those are the most supplies we could have possibly used. Was 740. And the ending supplies, that's nice spelling. Ending supplies. In other words, these are the supplies that were not used. Or 200. So the supplies used was oops, too far. You said 540, right? Yep, 540. Okay, so we know that it's going to be 540. That's how much was used. What are the accounts going to be? Now remember, these are adjusting entries, and I should let me put this up.
Would it be supplies and supplies expense?
Yep. And which one's the debit?
The debit would be the 510 supplies.
Well, we first put it in the account, but I mean for the 540.
Oh, that's right. That's right.
You're actually right. That would have been the debit for 510. But for the 540, so the supplies expense and supplies. Actually, if you come down, I didn't put it in here. Oh, I didn't put the chart. Man, who made this? Okay. So expenses are always debits. Sorry. So. So spices, and they're always debits.
Because I need to register my car, so I was like, yeah.
And the supplies are going down because right now the supplies have 740 in that account, but we have to take out 540, so there's only 200 left. Supplies is an asset going down. 540. Are you okay? You guys want to see the T accounts on that? Or are you okay with that?
I'm okay with it.
Okay. All right. Yeah. So this is supply expense. Now here's what I was going to tell you about adjusting entries. There's a couple rules for adjusting entries, and the first rule is no cash. Cash is not going to be in the adjusting entry. It can be a normal journal entry, but it's not these. And it's going to have either revenue or an expense. So the rules for adjusting entries, no cash, and it's either going to have a revenue or an expense. And I'm going to go ahead and pull up something here. And the nice thing about revenues and expenses are that, so all these are going to have a revenue or an expense. The good thing is revenues are always credits, expenses are always debits. So once you figure out whether it's a revenue or an expense, you know which one's debit, which one's credit, and the other side isn't going to be cash. So these are hard. the nice thing is they do have a revenue or an expense in every single one of them. Okay. One-year insurance policy was purchased for September 1st, 1800. Okay, so how much the insurance policy is used each month? It's a one-year policy.
$150.
Yep. Yeah, I'm gonna move this down actually. And for how many months do we have it?
One year, 12 months.
Nope. We purchased it on September 1st. And these are all journal entries as of 12/31. So December 31st is, that's the date we're going to use at the end of the year. We bought it on September 1st. So how much have we used? How many months were?
4 months, 3 months.
Yeah, right the first time, 4.
I was right. Okay.
Yeah, because we bought it on September 1st. We're going to use all September.
I think I was confused because I was thinking beginning of December, but it was 31st.
So this will be September, October, November, so April. So 4 months times 150. 600. Okay, so 600. So 600 will be the amount. Now, are we going to have a revenue or an expense?
And expense.
Yep. And the nice thing about expenses, debits. So we know what the expense is going to be. So this will be insurance expense. And what's going to go on the other side, and it's not cash.
Is it accounts?
This doesn't excuse me. We recorded it as prepaid insurance. So prepaid insurance is going to be the asset that we recorded it as. By the way, you think about it as an accounts receivable is kind of right, because this is actually insurance that's owed to us. It's not cash. So this is a prepaid insurance. Right. So this is an asset that's going down because it's no longer worth 1,800. We use 600 of it. All right, so there's our expense. We always have to have one revenue or an expense, and no cash. should put that in all these. Hey, I know that didn't sound. All right. Okay, so that one. Employees are paid wages totaling 3,500 for a 5-day week. That's okay. I'm sure there's a better way to write this. What amount of wages are owed to the employees for each day? So they're paid 3,500. So the payroll is $3,500. It's for a 5-day week, and they're paid every Friday. And so the 31st is on a Wednesday, but so
Would be 700.
Yep. So if weekly is 3,500, it's for 5 days. So on average, we owe them $700 a day. And how many days do we owe them for? So that's for Monday through Friday. The year end, December 31st, this is a Wednesday. Now, we're not paying them on Wednesday. There's no cash here. We're not going to pay them until Friday. But we're on Wednesday, and this is the the year end is on the Wednesday. So how much do we owe them as of how many days worth?
3.
Yep.
So it'd be 2,100.
Yep. We owe them for Monday, Tuesday, Wednesday. Oops. Okay, so what accounts are we going to use? Revenue or expense?
Expense.
Yep.
Salary expense.
Yep. The salary expense could be wages expense. The important word is expense. But yeah, salary expense, wage expense, either one is fine. And what is it when we owe somebody?
Payable, salary payable.
Yep. Salary or wages, either one. Yep. So there's the expense. And we owe them payable. We're not, and there's no cash. We're not going to pay them on Wednesday. We're going to pay them on Friday. So there's not going to be any cash, but on Friday we'll pay off this 2,100 that we owed them. Okay. Pigeon machine is purchased for $1,200. Will last 5 years and then be scrapped. Okay, so they bought it on January 1st. I think there's one exactly like this in our handout. I think I remember the 12,000 divided by 5. Okay, so how much is it per year? Cost 12,000. And that's for how many years? 5 years? I think we have one exact. I think I might have got lazy here. Actually, you know what it is? When you're doing adjusting entries, generally it's easiest to do it by 12s because a lot of times you end up with months. So anything that you divide by 12, that's what you use. So 12s, 12,000, 1,200, 2,400, 24,000, things that are multiples of 12, nice clean multiples of 12. Okay, so it's gonna be this much per year. And the accounts we use, I think I gave you the morbid way we remember it. DE at the end of its life, it's dead. And this is always for depreciation. So what's the DE stand for?
Depreciation expense?
Yep, that's the expense. So we have revenue or expense. In this case, it's an expense. And the 80? It's that weird account. It's a contract. So
Accumulated depreciation?
yeah, so that's it. And again, no cash. At year end, unearned revenue totaling 2,580 had been earned. Okay, now this is no cash. It's unearned revenue, so they actually had paid us ahead of time. The cash had already been received by us. Unearned revenue had been earned. Okay, are we going to have a revenue or an expense account?
Revenue.
Yep. Nice thing about revenues. All those credits. If you want to put earned in there, that's fine. I think I showed you guys that the revenue by definition is earned, but there's absolutely nothing wrong with putting it. So it's 20. Ooh, it's a little too much. So 2580 also. And what's the other account going to be? So there's so much of it we've earned. So we're going to recognize that. Okay, we did our work, whatever it was. We did work valued at 2580. So we no longer owe them that. So what's this other account going to be? Anyone?
Would it be the unearned revenue?
Exactly right. Perfect. So unearned revenue, that's the liability. Well, we no longer owe them for 2,580 of it. You know, we owed it to them before. Well, now we did the work. So we pick it up as regular old revenue, and we no longer owe them. We already did the work for 2,580 of it. They don't tell us what the total unearned revenue is, but we earned 2,580 of it. So this reduces the liability. You know, we either have to do the work or give them their money back. And in this case, we did the work. You know, this is did the work, whatever it was. Okay. I don't know if we talked about this one, but it's actually more like a chapter 2 one though. Revenues of 1,230 had been earned, but not billed at year end. Okay, so we earned, or they earned whatever, 1,230. They haven't billed them yet, and that could be for a number of reasons. Maybe they're not completely finished with the job. Until you're finished with the job, you're not gonna send them a bill. It could be that you do billing every, you know, the second week of the month or whatever it is. It could be like a monthly thing that you haven't billed them yet. But whatever the reason is $1,230 is work that's been done but not billed. So are we going to have a revenue or an expense?
Rev.
Which do you think? My question mark. Here's my question mark. So for this one, we're going to have a revenue or expense?
Revenue?
Yep. Nice thing about revenues. Revenues are credits. So we know what the credit is here. Well, first of all, it's no cash. And so revenue, one, two, so we have revenue. Again, you can put that in as earned revenue, there's nothing wrong. And even though, you know, I've seen companies that have listed revenue as earned revenue. So that's not, it's not that that term is never used. And usually the book data show it as revenue that by definition is earned. Okay, so what is it on the other side? What is it when someone owes us money? Okay, so someone owes us, go ahead.
No, I couldn't hear you. I was asking what you said.
Okay. So what is it when someone owes us money? What kind of account are we going to use?
Receivable.
Receivable.
Yep. Be accounts receivable. And it's an asset going up because now they owe us $430 revenue. So for all of these, you know, you go through whether they're revenues or expenses. They have to be one or the other. Good news is, and by the way, I'll have this on the test. You know, I mean, you have it in your other handouts too, but I'll put it on the test. So you have to go looking for it. Yeah, so I think that's it for a little bit, right? Yeah. Okay. All right. Well, now let's focus our attention. Oh, first of all, any questions on those problems on 11 through 16?
And what are the names of these documents that we're doing? You said adjusting entries.
Yeah, adjusting entries, they're the same thing as journal entries, they're really just journal entries. However, they're done to make sure that the revenues and expenses are in the correct periods.
Okay,
So for instance, this one, we earn the revenue in this period, so we want to recognize the revenue in this period. You know, the same thing here. We earn this in this period, so we want to recognize the revenue in this period and so forth. So they're done. They're trying to adjust the books to make sure that the correct revenues and expenses are in the correct year, basically. Yeah, I'll give you a real focus there. Hey, made it fuzzier. Maybe like grab it. Let's throw like this. Well, first of all, let me give you something that, you know, would it make sense to have revenues compare revenues from 2021 with expenses from 2020? You know, would that be, well, that's stupid. They're not even the same year. Why would we do that? So, you know, to avoid that, they have all these transactions that happen. And the transactions, a lot of times, will go through more than one period. You can't see what I'm doing. So, you know, sometimes they're paid up front. And sometimes they're not paid to the end. These are deferrals. They're paid up front. They're accruals when they're paid later. And so here's what happens is that you have, you know, this is over a period of time. So you have this kind of artificial period of one year. And so what we're doing is making the adjustments for this. So for instance, let's say that these, say the orange ones are revenue. So you're going to recognize the revenues. You know, some of them might be entirely within a year. And then you also have some expenses. And again, I'm just making this stuff up. But and again, some of them are going to be completely within a year, but some of them aren't. So the adjusting entries are for these amount. Actually, what we put out, these will all be already included, but you have adjusting entries for these that go from more than one period. So it'd be adjusting entry here, adjusting entry here, adjusting entry here, and so on and so forth. So that's what we're trying to do. We're trying to get all the revenues. No, these are revenues. Orange are revenues, and say these are expenses. We're trying to get all the revenues and expenses in that year, even though the transaction might be going for more, for more than a year. So maybe you purchased the truck 5 years ago, but you're still using it. So there's going to be some expenses this year. You know, anyway, the idea that these are going to be, we're just trying to adjust it so the revenues and expenses are in the correct period. So if this is 2001, no, 2021, 2001. The Wayback Machine. Okay, so you know, and again, it's kind of an artificial time period because you know the transactions don't fit in. But you know, take a piece of equipment. We can't wait 5 years to put out a financial statements. So you know, these are going to be generally it's a 1 year period that we have, and we try to get them all in the correct period. So this is what adjusting entries do. And notice something, you know, this is why there's no dollars, there's never cash in the adjusting entry. The cash has either been paid ahead of time or it'll be paid later. But on the, you know, on the date, you know, nothing is being paid on 12/31 or being received on 12/31. They either have already occurred or they haven't happened yet. So that's why there's no cash. You can see there's no cash right on the date. So on the date itself, there's not gonna be any cash. It's either been paid ahead of time or it'll come through later. It's a difficult concept. And by the way, you know, if you're struggling with these, you should, because these are, you know, these can be tough. And I think I told you this, I maybe I didn't, but I used to be an auditor. I was an auditor for Navistar and US Steel a number of years. Anyway, I remember they put an adjusting entry in. This is when I was working at Navistar. They put an adjusting entry in at year end, and then they decided it was wrong, backed it out. They decided it was right, put it back in, decided it was wrong. They put it in and took it out 6 times. And now, luckily, at year end, it was a correct entry. They had it right the first time, but you know they put it in. They had this doubt. You know, if we did that right, they took it back out. You know, it just said, you know, correction of an error, and you know, and so this stuff can be hard. It can be difficult to figure out exactly how much goes into what year. Okay, so let's go ahead and get started on the multiple choice questions. They are anonymous, by the way, so don't worry about anyone, you know, seeing what you did. But go ahead and enter those. And the 1 through 10. And when you're done, we will we'll see what the vote is. And again, it's possible to earn I'm gonna make this color coordinated. So whatever the class does, so put in for those for the multiple choice questions. We'll leave this open for a little bit, and it's maybe on 10 minutes or so. So go ahead and go through them, and do your best. You know, put whatever answer. Don't be afraid to put anything in. Again, it's anonymous, and these will be the extra credit points given whatever the class, how many the class gets correct. All right. So let's put this back. And to do, what am I doing? So go ahead and fill in that Zoom poll. Is there anyone that didn't get the Zoom poll?
I have it. I'm almost complete with mine.
Okay. Well, if you do, sometimes you have a block, pop-up blocker on, it won't show up.
So how do we see the questions? Go
They're
on
the-
Blackboard.
They're on the exam, the practice exam, the first 10.
Okay.
So
And then if you're trying to access the poll, like it's right there in the bottom bar, it should say polls.
Okay.
yeah, so for the first question, I made this so that we can do it. There actually is no easy way to load the whole thing up into Zoom. But so anyway, so for the first question will be this one. So whatever you answer for this one, A, B, C, or D, put that in for question 1. Then here will be question 2, and so on. And that's kind of going to be the way we're going to do it. And again, it's just because basically they make you retype everything in there for every poll that you do, and you can't upload it. You can't upload it, you can't download it, so you can't save it. So you put it all in and it's just gone. Yeah, so we'll be going over these together. We'll go through them and figure out what the correct answer is. You guys will have that before, as we go through them again. With see, well, first of all, how many extra credit points you guys get, but also to make sure you have the right answers for the quiz. And by the way, right after class, I'm going to send out the exams, and they will be due a week from tomorrow. I've been doing them 7 days, a week plus 1 day, basically. So it'll be due on Friday. What is that? Friday the 19th. So I'll send those out right after class. I'll send them out in the email.
Sounds good.
And this is pretty much the last of the journal entries. There might be a couple of them later on, but this is kind of the end of the worst. We'll say it that way. The journal entries. Okay, and yeah, so like 5 more minutes. We can get people time to finish up, and then we'll go through them, and that'll be it for chapter 3, which is the hardest chapter, I think. I was talking to myself just now. Is anyone still working on the poll? The reason I say it because I have to close it soon. If you're still working on it, either tell me or put it into chat. Otherwise, I'll close it. Okay, let's see. Okay, I'm going to go ahead and close the poll. And I will share the results with you. And we will go through these together. Okay, vintage laundry company purchased with the laundry supplies on June 2nd and recorded the purchase as a debit to supplies. Okay, so they put it in supplies. The inventory indicated $1,000 on hand. The adjusting entry you made in June is. Let's pick B. You guys, you're killing me. Why can't it be B?
Because expense is always a debit.
Yeah. Oh, wait, I gotta do something here. I'm sharing incorrectly. Let me share correctly.
I only got the last one.
Yeah, expenses are always debit. So if you run into a question where it says expenses are a credit, it's not going to be. And same thing with revenues are always credit. So if you come up with one that says a debit, unless it's something weird like correcting an error or something, it's not going to be like that. The accounts are correct though. It'll just be, yeah, D. So that one. Okay. 2, unearned revenue is classified as a D liability. That is correct. Three, adjustment for unearned revenue. I gotta move this thing. Hold on. Adjustment for unearned revenue. We just did one of those. Decrease liabilities. Yes, 3 is correct. Decrease liabilities. That's the unearned revenue. And increased. Now all revenues are earned, but basically it decreases the unearned revenue, the liability, and on July 1st, you come in with 6 months rent. So 6 months, what is that? 3,000 is where the 3,000 comes from. Financial period on July 1st, so 1 month has gone by. And 1 month's worth of rent is 3,000. Debit rent expense, yep. This is correct. If a company fails to adjust for accrued revenues, this is a tough one. It's actually D. I don't think we ever talked about this one. Well, I'll give you guys that one. Because accrued revenue, I think some of you guys were thinking of unearned revenue, which is a deferral. Accrued revenue, we haven't talked about. I haven't used those terms anyways. The correct answer is D. This is, it's basically like the last one in the handout. This would be accounts receivable. And revenue. And accrual is when you have some transaction. Can't see it. Neither can I. That you know, time goes on, you have some transaction, but the money hasn't been paid yet, so that's an accrual. So it's sort of like if we earned revenue, you know, for a certain amount of time here, we want to count that revenue even though we haven't received the money yet. So this would be, you know, accounts receivable that somebody owes us for it. So the accounts receivable is the asset. I'm not going to count that one against yours because I don't think I ever put it in the terms of being a. But this one is just like the. This would be accrued revenue. In other words, that you have, we've earned it, we just haven't got the money yet. I never specifically put that as an. All right, so D is the correct answer. I'm not going to count that one. All right, 6. What would you guys get? 1,600 is correct. So the account had a balance of 2,800. Oops. And 1,200 expired. So how much was left? The unexpired amount would be to subtract those two. Oops. 600 is correct, and you guys got that one right. 7. Seven is also 1,600. Yeah. All right, now don't get used to that. It's all 1,600, is it? So this one would be. I'll do it over here. So beginning supplies. That's nice how supplies was 1,500. Purchase of supplies. Yeah. 2,900. So available. 4,400. And they tell us that the supplies used were 2,800. And so our ending supplies were, what do I say, is unused. So we had all these supplies available. We used 2,800 of them. So how much do we not use? And 1,600. And again, that's just an unhappy coincidence that these two are both 1,600. Okay. 8. Starting purchase of key system for 3 years, no salvage value, the monthly depreciation. So 7,200. So this is per month. So the monthly depreciation is, yeah, it's B. So 7,200 and 3 years. There's 12 months in a year, so it'd be 36 months. Equals $200 a month. Question 9, I thought was one of the tougher questions, but apparently you guys did not, because it looks like you guys did very well with it. Yeah, the cumulative depreciation after 1 year will just be 1,800. Yeah, just 9,000 divided by 5. This one is probably the most of all of them on this thing, because most people put in the balance of 7,200, but you guys were not fooled. Very good. That is wrong. In fact, none of you are good. No one picked that one. Okay, so this is oh, this is another tough one. You guys, that is the correct answer. Yep, cost of steel and service revenue. All right, so that's not bad. So everyone gets +4 added onto their test. Everyone who was in the class and voted gets +4. So this is so really you only missed the one, the first one, right? This one I'm not going to count, but so that's not bad at all. Okay. Okay, so what I'm going to do is try to find my camera. Found it. Okay, so that's the practice exam. Any questions on it?
The 50% of us get it right.
Which one?
The 50% of us pass.
Oh no, well you guys got what did I do with it? Oh here. You guys got well I'm throwing out the one. You guys basically got 8 out of 9. So you are
Oh wow.
so this is where we
But
yeah, that's good.
is that good?
Usually around 75%, but yeah, it's what number is fine. You basically got 8 out of 9, whatever that comes out to. 88 or something.
Yeah.
89, I guess, 89%. Okay, so good. All right, so I will send out the exams shortly, and they'll be due on the 19th. Okay, so any questions? So this will be, yes, we'll get this added on to your, whatever the score is. Okay, any questions?
I think I'm good.
I went a min over, darn it. Okay, so I will, I'll say goodbye, and I will send out the exams. All right,
Sounds good, Professor. Thank you for class.
thanks.
Thank you so much.
Hey, Professor, have a good one.
You guys have a good day.
Okay.